What's good, everybody? It's CrenDeLaCremeInvestments, and one is back at you again with another video. In today's video is going to be a tag on from yesterday's video. If you haven't seen that video yet, it's pretty much how you get a bias of where the market's going for the day. So figuring out the daily highs and the daily lows. So if you haven't seen that video, go to the last video and check that out, because it's going to help you out a lot with this video, because this video is just going to go more in depth from the last video. Okay. All right, so I'm gonna try to keep this nice and simple. I'm not gonna go into too much detail because a lot of the stuff I already have on my YouTube, or I can just make more of it. But that's neither here nor there. So let's go into it. So last video, we'll find out where the market's going. You're gonna drop down to your lower time frames. In this case, for the example I'm gonna show you today, is a 4-hour time frame, and then that's where you're gonna use your other indicators that we use, such as imbalances, such as order blocks, such as supply and demand zones, such as liquidity points. If you have questions about that, I have a lot of videos on that on my YouTube. You can just go ahead and check all that out. All right, so I'm gonna start with just before we go into the actual charts, because I feel like this just works better. All right, so I'm trading when it's in trending market. So let's just say we have a downtrend coming. Don't pay attention to the chart, just pay attention to what I'm about to draw right now. So say we have a downtrending market, comes here, retest, comes here, retest, and then comes here, retest, and then keeps going. All right. Now let's just say this is the daily. And right here is the daily swing high. All right. So based off the information I've told you, it's going to take out at least one of them. Sometime both, but when it's a trending market, it'll usually take out the low. If it's a downtrend, or if it's an uptrend, it'll usually take out the high. Just high probability setup. So in this example, will be trending down. All right, so let's just say this is a 4-hour or a daily trend right here. So once we figure this out, we will eventually see that if this is the daily high and this is the previous daily low, and it's going to take out one of them, we're going to look to short the market to target that daily low. All right, because that's just the way the market usually runs. All right. And then when we drop down to our smaller, either look to get active into or order block. Can't spell it there. All right, so order block. So those are two confirmations. All right, so once we figure out where we're going for the day, like I said, go back and watch my previous video. Then once we figure out where we're going for the day, we'll drop down to that smaller time frame, and then we'll look for imbalance or order block to get active into the market. All right. So, and then once we find out the imbalance for the market, we're either gonna come here. So let's just say this is an imbalance that we entered off of right here for the choice of this diagram. Let's say this gray area is an imbalance. Then we'll zoom inside of here, inside of this area right here, and this is where we'll look for our confirmation entry. All right, and then you can either look for the confirmation entry in the form of breaker structure. So let's just say came in here for some kind of liquidity starting to form, a sweep of that liquidity, a breaker structure, and then we'll get active for the trade right here to take it down. So this will be on a smaller time frame, or we will look for another candle right beside it coming down. All right, we could add some wicks on here just to make it look more like a candle. All right, essentially we get the point. All right, so once we have the imbalance or order block that we're playing off of, the next step would be to find either the smaller break of structure from me, and then from there, or I'm gonna actually say, or a rejection candle. After we find out the previous daily high or low, look at my other video for that. We're gonna drop down to a smaller time frame and look for an imbalance or order block. And then once we find that, we're gonna zoom into this area. You can either drop down to a smaller time frame and look for the breaker structure that I showed you earlier, or stay on the same time frame and then look for the rejection candle, either in the form of a pin bar or an engulfing candle or a shooting star. I have it's called the Trading Bible, and it shows a lot of good information on different kind of candles that you can play off of. And if you're interested in that, sign up for a one-on-one with me, and I'll give it to you for free. All right. You can do that with the link below each video. So, all right, I digress. So once we figure that out, we can get in active for the trade. So after I showed you an example of this, go ahead and delete all this crap. Patient with me. Be patient with me. That was a way you can delete this quicker, but oh well. All right, so here's a little real life example. So this is we're on the 4-hour time frame, but this is the daily swing high, or daily swing low, and this is the daily swing high. So just like I was showing you in the example, we have a downtrend coming into our trading range. All right, so this is always a trading range between the daily swing high and the daily swing low. You don't want to never trade or really look outside of that once you get a direction, because it's really no point unless you're trading on a weekly time, or unless you're looking to hold for weeks and months. But if you're a day trader, stay in the daily time frame. All right, so this is our daily range. So based off of this, coming into a downtrend into our daily range, what would be more probable for the market to do? Would it be more probable for it to come into this imbalance off of that trending time frame, come here, and then take out that low? If you said the second one in this situation, so this is all back testing, also let me know if y'all are interested in streaming. I'm getting a new computer, and just let me know what days would be or what times would be. Well, I trade the London session, so better yet said, what days would be better for streaming, and comment below for that. But so this is what I'd be predicting off of this, because we are already in a downtrend. All right, and then you got to look for different parts of the market. Do you see anything that really can form down here that will look to take this out? No. So all our areas of interest are up here. So we not only do we have an order block that I just highlighted here, we also have, take this out real quick so you can see retail liquidity sitting right up here. But put a money sign for money. So a lot of people looking to trade off this trend line, but we trade smart money, so we sell above and below what a lot of people do. But we already know that. So let's go ahead and play this out. Rejects, gaps up, comes into our balance, rejects a little bit. Like I said, we're looking for a confirmation, and we also have an order block up here. It's not entering yet. All right, no rejection candle, nothing that's really forming yet. All right, bam, entire area. All right, so once I'm into this area, what are we looking for again? We're either looking for a smaller time frame, breaker structure, or some kind of rejection candle. So we're gonna stay on the 4-hour. Nothing yet, nothing yet, nothing yet. Bam. Have a nice engulfing candle here. All right, nice engulfing candle. Like I said, sign up for the one-on-one mentorship if you want to get that book, or with just more detail on what rejection candles really are, or really mean in the market. So we have that. So once it comes up there, we have a rejection candle. So you could either enter right off of here, with a stop loss right above here, or like I said, you can drop down to a smaller time frame. And for the sake of time for this video, I'm not going to jump into this market. So either you could just wait for the rejection candle, or drop down to a smaller time frame and see some kind of wipe off method like this, create liquidity, sweep of liquidity, break a structure, get active into, and then take it down. Or you just want to keep it simple and just wait for your rejection candle on the same time frame, and that's what I'm going to do for the sake of this video. So let's just say that we went ahead and took the short position. All the confirmations are met. Either put the stop loss above here or right above here. All right, and then like I said, we will be targeting this daily low for long-term targets. But as you can see here, we also have another order block here, which is a liquidity point. And you can go back and watch my other videos on how to get out of the market, which is similar to the same way to get into the market. So we have a liquidity point. So let's actually just say TP1 right here, and then a TP2 right here. All right. All right. Start trending down. Almost hits our TP1. Come back, retest, and like I said, you can drop on a smaller time frame if you're not comfortable entering into just a what do you call it, a rejection candle. All right, TP1 hit, taking profit, probably moving to break even at this point. So TP1 will be hit. All righty, comes back up, fills into that gap that we dropped down into there. TP2 hit. All right, now what I'll do is move my stop loss right below here. Just swing high, swing low, and I can actually do a video on that later. And then we'll keep holding, and then TP3 is hit. All right, so I'm gonna go ahead and end the video there. Go ahead and check out my other videos and like the video, guys. It helps me out. It helps me know what y'all like. It helps me keep pushing, honestly, just to see that y'all are actually getting value from this. All right, so CrenDeLaCreme is out. Hope y'all enjoyed the video.